Apple launches the biggest bond deal in history, raising billions of dollars and sending the stock up a bit. We got the after hours number there, about 0.1% up in after hours. We'll have that and more right here, right now on the News Hub. Good afternoon and welcome. I'm Simon Constable. And to tell us more about this mega deal, Katie Byrne joins us from the Fixed Income Desk. Thanks for being here.
Hi, Simon.
So, they raised billions, or should I say billions of dollars. How much exactly?
They're going for 17 billion, so they're still in the throes of pricing it all out, but they know pretty much where they're going with it, and there's a lot of demand. There's about 3 times more demand than what they need to fill the book. So,
wow.
Yeah, it's a big day in the bond market for sure.
So, and what will they pay for this debt, interest rate wise?
So they're doing it in 6 pieces, and on the fixed rate side, there's 3s, 5s, 10s, and 30-year bonds, and the 10s look like they are coming around 2.42%, which is just wide of where Microsoft recently just priced at.
So very cheap money for
almost AAA-like type. Yeah,
wow. But they're happy with that. Now, if they bring in the 17 billion, which is what they're expecting to, and it looks like they'll do that, they will be the biggest deal ever, just ahead of Roche and some other companies.
In the US, in terms of US marketed corporate debt, yeah.
Right, look at that. So Roche, 16.5 billion. I mean, Pfizer down there, even General Electric, which is a mega company by any standards,
right.
11 billion. It's looking small down the bottom there, isn't it?
I know. I mean, the interesting thing is this isn't even where it stops. I mean, Apple's said to be doing this sort of one mega deal this year, but then they're going to have to keep doing more because they want to do 100 billion in return to shareholders through 2015. So, they're going to keep doing a lot of debt issuance.
And remind us why they're doing this, because they have a ton of cash on the balance sheet.
They've got 145 billion in cash on the balance sheet. A lot of it is overseas, and it's so cheap right now to issue debt that's much cheaper for them to just issue debt here and borrow versus bringing that cash back on shore and then paying tax on it. So,
and that's the repatriation tax that people worry about
right.
quite a lot. Now, one of the things I find very interesting about the bond market is this is not like going to the bank for a loan, is it?
No.
Like when you go to the bank for a loan, you say, I want $10,000, and you'll get $10,000. This, it's tell us about it. How's it work?
They knew that they could sell a huge, humongous offering, but they never know exactly how much they can sell until pretty much, the morning of the deal. So they check, what's the macro environment? Can we bring a deal this large? They've already done their roadshow, their chats to the large investors to figure out, what's the tension point there? How low can they go? Just how cute can they get with the pricing? And then on the morning of, they bring the deal, they structure it, and then they start to figure out sort of. Early this morning, it was somewhere between 14 billion and 16 billion. Then they figured out they could raise it a little bit. And then some investors came in telling me, oh, well, maybe they got a little too cute. We'll see if this backfires on them. And then, they start to firm it up.
It is a bit of a dance, isn't it? Because once it becomes popular, it becomes really popular,
right.
As everybody wants to pile in.
And what's interesting with this is if it gets a little too low on the yields for some of the regular corporate
That's the cost of debt to them, if it's a little too cheap.
Of what they pay to borrow. If it's so cheap for them to borrow that some normal corporate bond buyers wouldn't buy it, you've got buyers, who've moved out of the treasury market, which has got so low yielding, and some buyers who would normally buy agencies looking at this kind of deal too. So you've got that crossover element to it.
Now, there is another massive amount of demand out there from insurance companies, and they need bonds all the time to match their liabilities, right?
Right, so they'll definitely be in here. There'll be all sorts of, it's across the curve, it's all sorts of buyers in here, and that's why this broad appeal is leading a lot of people to get cut back on the allocations that they thought they'd be able to get, and that's feeding further the demand for the deal. So
great stuff, very exciting news in the bond market.
Yes.
Katie Byrne of our Fixed Income Desk. More on that on WSJ.com.